Welcome, everybody. Nice to see you. Thanks for being here. I know everybody's very busy and has a lot to do, so we'll make this hopefully really valuable for you and keep it hopefully to around 1 hour. And but I can give you a lot of information. I have a lot of new content and some new distinctions, and so I'm just going to dive right into it. So I posted this thing just to needle the real estate people a little bit. I wanted to needle some real estate people. And real estate people are like, what's he going to say? What's he going to say? But I went to the Berkshire annual meeting and Buffett said some things about real estate, which I hadn't even thought of. And then there were some things I've been thinking about for quite a while. And I talked to my master's group about because there's a lot of interesting things, but I just want to preface it with a few slides so we have some framework to deal with. And so that's what I'm going to do right now. Let's see here. Oh, yes, here we go. So I have this title, Real Estate, Which is Better? First of all, I just have to say I'm not a financial advisor, okay? I'm not a financial advisor. I just was talking about investing. There's just for informational purposes. You should always seek, professional advice from licensed financial advisors, lawyers, accountants, that type of thing. And anything about past performance, not indicative of future results, all that stuff. So just so you know a little about me, for those who don't know, I do speak at Tony Robbins Wealth Mastery events. I've spoke there for the last 2.5 years. I spoke at Platinum Financial with, I was on stage there right before Paul Tudor Jones and Ray Dalio and others spoke at that event. So it was a great honor to speak at Tony's events. I love Tony. He's the GOAT of GOATs. And, so his events are always, and his books are always really, really useful. What I do on top of that is I get into more of the specifics of how professionals pick investments. And so my background is that I actually did that from 1996. I worked at Credit Suisse First Boston in New York City. And I was on the syndicated finance desk. It was like an old trading desk like you see in the movies with the turrets and the phones were ringing and you pick the phones and people yelled, yeah, yelling at each other. No, but it wasn't that crazy, but it was a great experience. I was with very high level, successful people were there, and I learned a lot. Then I left in 2000, and I decided I wanted to be a trader, an equity trader. Good timing, actually, not because it was the market topped out in March 2000. I think I left right at the top. And then I had a bear market for 3 years. So I cut my teeth, as they say, in a really hard market, but that was equity. So in Credit Suisse, I was dealing in debt. So we were trading debt, loans, and hundreds of millions of dollars. Back then, hundreds of millions of dollars was a lot of money. Nowadays, we talking trillions, so what's hundreds of millions is nothing these days, right? So, but it was a great experience. And then I worked as, like I said, a proprietor, prop equity trader. They call it prop trader. And, oh, wait, what is that, Jessica? Oh, is that on my screen? Oh, okay. Apparently there's a thing on my screen that shouldn't be there. Thank you. And so after that, I had a property management company. I was buying real estate since 1998. I've owned real estate since 1998. So I know a little bit about real estate, a lot of bit about real estate. I know a lot about stocks because I've been doing that since 1995. So I do have a lot of experience in both. And I worked in New York City, which is kind of like a tough market. Like you have to be smart, you have to be shrewd, or you get your butt kicked. And, so I did real estate deals. I was battling it out. I bought small buildings in Brooklyn, and I still own today, and I collect rent off those. And I love real estate. I love real estate. And at the time I was buying, though, in 1998, when I started, nobody cared about real estate. It's very different than today. Prices were low, and it was good. And so we'll get a little bit more into that. But anyway, so I have these experience. and I publish content through The Ultimate Investor, the name The Ultimate Investor, which I'm not saying I'm the ultimate investor. What I'm saying is that it's sort of an aspirational thing, and there's a framework to invest really well if you're going to pick your own investments, which most probably shouldn't. You should have a financial advisor always, even if you are picking your own investments, so you can run it by them, and they keep you on track with a lot of things. So for most people, that's very sound advice for 90+% of the people. So anyway, let's just do a little bit of framework here. And just, this was when I was at Platt Financial with Tony. I spoke in the virtual studios, Wealth Mastery. I'll just show you these pictures in case you don't know me. This is in my house. I had this building on my lot called the Batting Cage, and I did 2 events there. And these were people that were there. It was awesome. I should have never sold that house. Don't sell. I'm going to talk about that in a second, but I should have never sold it. First, let's get to real basic. What is investing? You're like, really? We're gonna go this basic? But most people get confused from the start. People think investing is I'm going to buy something that's going to go up and I'll sell it. So they look at it kind of like a casino. They walk in, try their luck, they buy a stock. Now, people who do real estate, they don't do this. But when it comes to stocks, they do it. In real estate, you a lot of real estate people who buy apartment buildings, you do a lot of work. You look at the income and everything like that. But just generally speaking, Ray Dalio said this at Platt Financial, was brilliant. Investing is a lump sum payment today for future cash flows. You're laying out money today, putting it in something, and you're going to get money back later. There was an old thing, Aesop. How many remember Aesop's fables when you were a kid? How many remember a bird in the hand is worth 2 in the bush? That was actually the first investing lesson. It was from a long time ago. What he didn't say, though, Aesop, he missed a couple things. First of all, you had to make a judgment. How many birds in the bush? When were you going to get the birds? You're going to trade your bird today, your money today, for more in the bush that you don't know. It's out there. It's hidden. But you kind of make a judgment about it. That's investing. And you want to buy something today that's of a good value. So for less than it's worth. A lot of people are confused about this. So I'm just going to get basic. All right. Secondly, why should you invest? This is real basic again. But Tony says this all the time. You never earn your way to wealth. You must invest. And you must learn how to do it, because if you don't, you lose your money to inflation. Inflation is always eating away your dollars, right? And if you don't know what you're doing, you get enticed into bad deals. There's a lot of bad offerings, bad promotions all the time. That's how I started this. I saw people pitching each other in the community and outside, really bad offerings, bad investment opportunities. People would lose their money. It was crazy. And I just couldn't believe what people would invest in. And then I started talking to people after I was writing, and I learned a lot about why they did it. The other thing is that people are not thinking a lot about these days, or maybe you are, is AI is going to eat everyone's job, right? It's going to take your job. So you can do a couple things. You can learn how to use AI and teach other people and use it yourself to become more productive. But AI is a massive productivity gains. So that means you can do more with less. How many are already doing this with AI? You just ask stuff and you're like, it's unbelievable. It's like having the greatest assistant in the history of the world, which costs $20 a month, and no payroll. You can yell at it, get mad at it. It won't file a labor claim against you, and you could get all this information. So AI is great. The problem is it's going to eat your jobs, and I think that investing is one way to protect against that, because many companies will make a lot of money with AI. And so you could profit from those businesses that are publicly traded companies that are using AI to become more efficient. They'll make more money with less, and those stocks that represent those businesses should do well. So this is just my philosophy. I think there's really 3 important things you need to learn in life. Is to communicate well. If you can't communicate, you can't talk to people, you can't get your ideas across, life is hard. If you have a product or service or even in your job, you have to be able to market yourself, right? You need to be be able to express yourself in a way that other people will engage with you. And then the third great skill, I think, is to invest, because neither of the first two skills, if you do the first two well, you'll have money. But neither of those will produce the returns of investing. Investing can dwarf all the returns of the others, because you can work real hard at your business and whatever, make money. You can make a lot of money. But the investing returns, at least in my case, I know that's just the way it is, it dwarfs anything you earn. So it's a really good skill to learn in depth. So the real question is, like, how do you spot great investments and avoid the myriad of bad ones? And I'm talking about real estate and stocks. And most are confused about this real estate and stocks. And they've heard things. They've heard that real estate is better. You control it. It's cash flow, cash flow, cash flow. That's what Grant Cardone always says. It's cash flows, baby, cash flows. And that's true if you buy a property correctly that throws off cash. I have a friend who's in a deal of grants. They get a 1% return on the money they put in. They're getting 1%. So his projections didn't work out. He told people it would be more. Now, I'm not blaming him. I mean, he took a shot, whatever, but he's a little bit aggressive. And if you don't know what you're doing, you put your money into something like that and you get 1%. This is not good. This is not good. It's better than zero. I have other people in real estate deals. They're getting totally wiped out. I have people who join my groups. They didn't join my group before they did the real estate deal. That would have been a better decision. But they're losing their money. Millions and millions of dollars. So we don't want to be there. So look, real wealth is built by compounding and ideally never selling. Now that's hard to do. It's nice to say, oh, I'm going to buy something and hold it forever. But it's not that simple to buy something and hold it forever, because some things aren't worth holding forever. But so you have to know the difference. And it's very exciting to jump in and out of things. And people teach that. I buy real estate, I do a syndicated deal, I buy, I sell later. Now there's nothing wrong with it. I'm not knocking it, but is it really meet your long-term goals? And the problem is, okay, so let's say you do that and you do a really good deal, and then you make a lot of money. Now they return your money to you. So if you're a limited partner, so you get your money back, you're like, wow, I made money. Now guess what? You got a new problem. You got to do it again. You have to do it again. And that's not always easy to keep doing it correctly over and over again. I don't think I do really well, but I don't want to be having to do that. So if I find a great asset, and I would encourage you to just think this and see if it resonates with you. If you can find something really great, a great business through the stock market, a great piece of property, and you can analyze it correctly, because there's some things, again, are not worth holding. They're not going to compound. They just don't have the criteria. But some will. So if you can find those, why would you sell it? Why would you sell a great thing? Just you get an endorphin hit, you make some money, you feel good, you feel like you're smart, and then you got a problem, you got to reinvest it. So I'm just giving you another way to think about it. So great investors hold forever, ideally. Compounding, they call the eighth wonder of the world. You've all heard that. The compound effects of compounding is tremendous, and it's almost impossible for humans to think about how compounding works, and most don't have the patience to actually see that through. Charlie Munger was Warren Buffett's partner. He said the first rule of compounding: never interrupt it unnecessarily. Don't sell great assets because you want a profit right now, makes you feel good, and you could have made 10, 50, 100 times more than that. Again, you need to know which ones. Charlie Munger also said, they asked him, when do you sell? He goes, I don't look for exits. I don't want to look for exits. I look for things I don't have to sell. In the end, he owned, I think it was 5 things. He owned Berkshire Hathaway stock, Costco stock. He loves Costco. I love Costco. I only joined Costco a couple of years ago, and I was like, this place is great. It's amazing, right? It's always packed. What a business. Problem is, in the stock market, everyone knows it's a great business. No one doesn't know. If you've ever gone to Costco, you know that's a great freaking business. And then you look at it and you feel good, right? You feel like you're always getting a deal. Customers love it. But here's the thing, the stock market knows, and the price of Costco on this public stock market is very high. So it's always frustrating. I would love to own Costco. Nothing would make me more happy. But the price is very high. And if you overpay, even for a great business, you will lose money. Or you won't make very much. You'll end up like Grant in his 1% deal. But I think Costco will probably do a little better than that. So it's not just identifying a great asset. You have to buy at a great price. It's literally the most important thing. In fact, you could buy a crappy company, a crappy piece of real estate at a really good price and make money. Do y'all see that? If I can make money on anything if I pay the right price. You get that? So a bad company, a bad property actually could be a better investment if you could steal it at a great price. I remember just in the group, we were looking at real estate deals a couple of years ago, and there was, listen to this, an office building in Chicago with suburbs. Now, Chicago has had a lot of problems, but I was telling people, look, San Francisco, New York, Chicago are all very depressed markets. They have a lot of problems. And guess what? The real estate in some cases was very cheap. You could buy an office building, I think it was at $20 per square foot. $20 per square foot. Now, if you were to build that office building, what do you think it would cost? $200, $300 per square foot. You're literally buying it. Now, is it worth buying? I'm not saying it was, but I'm just saying at that price, now I'm not in Chicago, so I wouldn't do a deal like that. And that's one of the things with real estate that people don't get. If you're not doing it locally, it's more hands-on. Now, I want to buy a property in Chicago, even if it's the cheapest thing, and I got to fly up there to handle it. And guess what? You can say, I'll hire a property manager. Okay. And you're going to have to manage that property manager. You're going to have to know what you're doing. I got news for you. There's no passive real estate. It's a myth. Now, you could be passive as a limited partner in a syndication deal and literally do nothing. But a lot of those deals do not work out that great for the limited partners. You really need to find a very good general partner who has aligned interests with you, meaning they're not just making a ton of fees off selling a deal. The deal does well, they make money. You make money, they make money. That's how it should be aligned. Many people miss that point as well. It's hugely important in real estate. Okay, next slide. But look at this. This is from the Forbes 400. This is according to Grok AI. Out of all the richest people in the world, 26 are real estate investors. Now, it used to be much higher 50 years ago. Business owners in stock or own stock in businesses, 329 individuals. Private equity hedge fund managers, approximately 45. So a lot of people got very wealthy. Now, a lot of them started businesses and they were the major stockholder in a business. But guess what? You know what's great? And I'll get into the actual specifics of real estate stocks. It's right here in my notes. I'm going to get into it in 1 second. I will go through a list. You can take notes. But I just wanted to preface. But you know what's great about stocks is you can own the greatest entrepreneurs in the world who bust their ass working, coming up with great ideas, and you can participate with them. And if you start thinking like an owner, because a stock share is nothing more than an ownership interest in the business. It's a truly passive ownership interest. You're not going to influence the company. But you can pick great businesses and you can look at their financials if you know what you're doing and you have some framework. I call it the framework. There's very simple criteria and it's simple, but it's not easy to think it through. So simple meaning there's a few criteria. You want a business that you can understand, that you could see the future of. Now, many people make misjudgments about that. They think they could see the future of a business, but they've underestimated that the company might have massive competition. I'll give you an example. Warren Buffett, arguably the greatest investor of all time, returning 19% compounding returns for 58 years. 58 years he did that, and he's still doing it. Okay, he bought Dexter Shoes. Now, he's one of the smartest guys in the world, and he bought a company called Dexter Shoes. And he thought he could see the future of that company. He determined he was buying it at a good price today. He went through the framework. He said they had good management. But guess what he didn't see? He didn't realize, this was back in the 80s, he didn't realize that the outsourcing to Southeast Asia of things like shoemaking was going to happen. He didn't see it. He didn't see it. So even the smartest guy in the world made a bad decision on that, and he lost a bit of money on it. But he got out of it, and that's one thing we'll talk about. We don't want to lose a lot. All right, so let me go through the real estate or stocks. This is from Warren Buffett and also some of my observations. I'll tell you Buffett's first. Buffett says why Buffett prefers stocks. He doesn't own real estate. He has a piece of farmland he bought when he was like in high school. What were you doing in high school? He was buying farmland. What were you doing? I don't know. I think I was skateboarding. And playing guitars, by the way. I was playing guitars. I have my guitars here. They're not investments. They're collectibles. People get confused about that, but I enjoy them. Okay. So Buffett, so he doesn't like real estate. Why? First of all, there's not a real estate deal in the world at this point that can move the needle for him. Like he could do $1 billion real estate deal and it would be a blip on the size of a company that's worth 1.1 trillion. So it doesn't really move the needle. But more than that, this is what he said at the annual meeting this year. He said, I can walk onto the New York Stock Exchange floor and I can do billions of dollars in transactions instantly and it closes. They could buy the stock, it closes. There's no negotiation. The price is there. You buy it, you're done. Now, real estate, how does it work, real estate folks? You find a property you like. You go and you look at it. You make an offer. Let's say the offer gets accepted. Now, you go into due diligence. And the whole deal could fall apart later. So you got weeks, months, years sometimes to get a deal done. So it's not as efficient in that way. It's not as efficient. So this is what Buffett was saying. He's also saying that, and this is something I had thought of a lot in the last few years, is the markets are very rarely mispriced in real estate. They're very rarely mispriced. It's a very efficient market. Stock markets are an auction all day long. It's an auction market. There's bidders, there's sellers. And here's the great thing about an auction market, which most people don't like. They don't like an auction market because guess what? Bad news comes out, tariffs, stocks fall. And most people go scared and they say, well, the stock market's telling me something. I got to get out too. So they sell. And then selling a sinking market attracts other sellers. And then you got hedge funds, short-term trader, and they have to sell because they have to produce their returns. By the way, if somebody's not on mute, please just check and mute your mic. Thank you. So an auction market has dislocations because why? All the emotions are playing out. You have fear and greed, fear and greed. They all play out in real time and they compound on each other. They sort of are like self-fulfilling. So when a market's ripping higher, buyers come in and the prices get dislocated on the upside. When people are selling, and the great opportunity is when people are selling, and I'll just stop this screen share for a second. And when people are selling, you can buy, if you know what you're doing, you start looking at businesses and you say, you know what, everyone's going nuts over here selling stocks. That business is actually a great value right now. It's a great value right now. In that last sell-off we had recently with the tariffs, I was telling the Masters Group, I was saying, this is what I like, this is what I'm buying. And many of those things are up a lot. And so periodically things get dislocated. I'll give you another one. I'll give you a specific example. How many heard of Dollar General? The dollar store. By the way, totally boring. Totally boring. Nobody cares. No, it's no AI. It's not hot, which I love because the hot things that everyone's talking about are usually already priced too high, like Costco. Now, Costco is not exactly exciting either, but everybody knows it's a great business. The price is too high. Everybody knows NVIDIA is a great company. Everybody knows, you can name them, the companies. And so when everybody knows something, it's rarely going to be dislocated. Oh my God. This is unbelievable. There's a stray dog that we rescued I'm looking out my window. Sorry, this is just crazy. We rescued him 2 days ago. We found the home. It's 2 blocks away. We fed him all night. He slept inside. And he just came back. He just came back outside my window. This poor little guy. I don't know what to do with him. There's no one else is home here. We treated him so nice. He came back. Oh, boy. I might have to take a short break to do something with this dog, but I feel bad because I don't want him to run away now. Well, we know where he lives now. All right. Anyway, that's crazy. Anyway, where was I? So in an auction market, this is the benefit. Here he is, little guy. So hold on one second. Come here. Come on. Come in. Come. Sorry. This has nothing to do with stocks and real estate, but I do love dogs. Okay, so in the auction market, that's the benefit. Now, in real estate, there's no ticker symbol on your apartment building. You walk down the street, you don't know what the price is every day. You have to negotiate, you have to uncover the pricing. Now, that can be an advantage. If you know what you're doing, somebody doesn't know what they're doing, you can get a good price. But the real estate, there's so many people bidding on certain multifamily properties that they don't tend to be dislocated very often. Now, occasionally it's happened. 1992, prices fell a lot. Savings and loan crisis in the United States. 2008, people got over leveraged. Prices were low for years. One of the reasons I could buy at 98 at a good price, the good thing about real estate is when prices do get, it's like a slow motion train wreck. People get hurt over long periods of time. And they, what happens is it takes time for it to play out. And while it's playing out, and then people give up. And nobody pays attention. And so then you might have a few years where the prices are really low. So it's happened a few times. When I first got involved in 98, it's one of the reasons I paid very good prices. And even by 2003, I sold some properties. I rolled them to a 1031 exchange into Williamsburg, Brooklyn. How many heard of Williamsburg, Brooklyn in New York City? This is where, by the way, how many heard of hipsters? You heard what a hipster is? Hipsters were invented in Williamsburg, Brooklyn. So that became a big thing. So I rented apartments to hipsters and young kids who couldn't afford Manhattan, and they would go one stop on the subway to Williamsburg, Brooklyn. And back then it was not nice. There was prostitutes on the corner when I would drive home at night, literally. And I would see helicopter fly over things. But what did I see? Was I just nuts? No, what I saw was all these young kids coming in, and they were buying real estate. They were renting because they wanted more space. They couldn't afford to live in Manhattan. But it was literally one stop on the subway. You could be in Williamsburg, Brooklyn. And what did I see? All these cool bars, nightclubs, art galleries, coffee shops. And that was a sign that, things were changing. So you had to be able to see something that wasn't quite there yet. And this is where people get really messed up because they start seeing stuff that ain't there and ain't never going to be there. And then what happens is other people see it and believe it. By the way, how many have heard of ARK Invest? Kathy Wood. Have you heard of ARK Invest? Now she has a pretty bad record, but she's on TV all day long. And she invests in things. She's looking in the future. And she's been right about some things. Tesla, she was early and right. Okay, I'll give her credit. She was right. But on the other hand, she invests in a lot of things. She's like, there's going to be... And it's so far out in the future. It's like, that's why her ETF, ARKK, has done pretty poorly over the 8 or 10 years, I think, relative to the stock market. So you got to have some sense and grounding when you're making these predictions. Okay, let's get back to, so real estate, stocks are liquid. That's the one we all know. Stocks are liquid, real estate's not. But here's one I thought of. I was thinking, when you buy a property, right? How many are real estate folks? Nobody wants to raise their hands now. Okay, good. Thanks, Giselle. So you buy real estate. And so your property, if you own an apartment building, you say, my rents maybe go up 3% a year, right? Something like this. 2%, 3%. By the way, I have news for you. I've been in real estate 27, whatever years. It doesn't always go up, the rents. Rents don't always go up. Newsflash. I've had periods of time where they were down. I've had periods of time where they're flat. Maybe on average, it's 2-3% a year, on average, but it doesn't go straight line. So when you see projections on real estate deals, it says, it's going to go up 3% a year for the next 10 years. Good luck with that. Good luck. So now, sorry, let me just find my thing here. So the thing about that is if you make 3% real estate, with great businesses that trade in the stock market typically earnings grow anywhere from 10 to 12% on average. So their earnings are growing. Think of your rents as earnings, right? Your earnings are growing 3%. And then not only that, your expenses are growing a little bit. But the net income of stocks in the stock exchange are growing on average 10 or 11. That's why there is no mystery why stocks returned average 10% a year for the last 100 years. Stocks follow the earnings of the underlying businesses. So on average, if stocks are earning 10%, businesses are earning 10% on their every year, their net income, they are that is because that's why the returns are there. So what happens is the earnings go like this over time, up, right? The earnings go up over time, but the stock price goes like this because of emotions and all these things going on. So if you get smart at it with stocks, the earnings are going like this, roughly average, and some are much more. NVIDIA's earnings going through the roof, some are going less. But if you understand this, and when stock prices, when the emotions of the market get dislocated, you can buy things at great prices. That is the whole game. That is why Warren Buffett and Charlie said that's how we got wealthy. That's how we got wealthy. We bought things that were dislocated. It wasn't any mystery. And they said, you don't have to have an IQ 160. If they say, if you have an IQ 160, give away 30 points, you're not going to need it. So let's do a few more. In stocks, people get confused about it. I hear all the time, real estate's easier. Now, I think real estate people understand a little bit more because you go and look at an apartment building and you say, I understand this. I've got income, rents, I've got expenses. It's pretty easy to understand. It's pretty easy to understand. However, to execute takes more work and skill on your part. It really does. Now on stocks, I can look at a business if I know some basic things. Like how many realize like Elon Musk is probably one of the great entrepreneurs of our time? That's like not a news flash for anybody here. But if I can look at something he's doing or some other entrepreneur, and I can invest with these great organizations that are professionally managed, they have board of directors. I'm investing in things, if they're public, they have to go through a lot of criteria. It's harder to have like scams and things like that going on in public markets, although it's happened, but it's harder. Whereas in a private real estate deal, there's so many, a lot of ability and opportunity for bad offerings to be made and even hustles and scams and that type of thing. And you're not dealing with professional organizations necessarily, even ones who are doing syndications and things like that. A lot of them are just, one-man shops, or there are few people got together to do it. So you're investing there. There's more opportunity for problems and amateurs being involved. And okay, but again, if you're good at it, I understand real estate. The advantage of it is you could control things, and if you're good at it, you can really put your creativity and effort into it, and you might be able to juice your returns. Whereas in stocks, you cannot juice the returns. The company doesn't care what you think about it. It's going to do what it's going to do. You can't do anything about that company, but you could do something about your real estate. If you made a good decision, and maybe you're a little smarter, a little more creative, you can do some improvements to your property and do things that will increase your returns. Now, here's the other thing. In real estate, you can lose leverage. So I don't want to say, okay, stocks are making 10% a year. Real estate's really only going up 3%, but you use leverage. So let's say you use third leverage, so your 3 becomes 9. You'll get that? So let's say you take 66% debt. And so now your 3 becomes 9. So now you're saying, okay, well, I got 9 on real estate, I got 10 on stocks, but I control my real estate. I know what it is. I know where it is. It doesn't move. I go down to the corner. The building's still there. I don't have to worry about some guy, CEO somewhere making a bad decision. So I get that. I get it. But here's the thing. You do have sort of in my opinion, it's hard to invest outside of your local area if you don't know what you're doing or you don't have a really good team. So a lot of people invest locally, so it sort of limits you. In the stock market, at this point, one of the reasons I prefer these days stocks is I could sit in my room here and I can look at businesses all over the world in different countries, and I can buy into those businesses through public stock markets, and I can participate in those businesses' growth. But it's really a mindset change that it's very hard to do. And I wouldn't say it was easy for me initially because I was a real estate guy. And I would encourage you to think about it. If you really think like an owner of a business, think about that. You can be an owner in great businesses all over the world, potentially. So it's a really good skill to learn. And guess what? When markets are high here, somewhere else they're low. And people are ignoring things. And I found things that are unbelievable. I tell people in the group, they can't believe it. I'll give you one for your real estate people. There are companies in China, real estate companies, that trade at 20% of their total asset value. Now, just to give that a frame of reference, let's say you own $10 million of real estate. And someone came, or your buddy owned $10 million of real estate, and he said, I'll sell it to you for $2 million. How many would do that deal? How many do that deal? That's a good deal. Buy $10 million in real estate for $2 million. Sounds ridiculous. You think that can't be true. It's true. I found companies that trade, major companies. Oh, I didn't talk about Dollar General. Let's go back to Dollar General. So what happened to Dollar General? This was in January. I told my group about it. I'm not saying buy it now. It's up 35% since then. But I basically had a thesis. Dollar General was getting crushed. Stock was down a lot for a couple of years. And I never paid attention to it. But I like to look at things where everyone else just hates it at this point. You know, the old saying, buy when there's blood in the streets. That's another way to think about it. It's like no one cared about Dollar General. Inflation was killing them. Why? Let's just think it through. Dollar General, who's their customers? High income, wealthy people? Lower income folks? Yes, a lot of cash transactions. They couldn't raise the prices on these folks as much. So what did that do to your business? If you have a business and you can't raise your prices, but your expenses are going up, it's called squeezing margins. Your margins go down. You're earning less because you can't raise as much as your costs are going up. So they held the costs steady, roughly, not completely, and then their costs went up. So everyone got real negative on them. And then it was like, oh, a lot of products come from China. We got tariffs. Oh my God. They knew tariffs was coming. So everyone got negative. But what was happening now? Well, everybody was so negative on it. Something was happening. If you actually looked at what was going on, you could see Dollar General had averaged 5.9% growth every year for 10 years. Their margins were roughly, typically, historically, around 9% profit margin. Okay, do you understand? So if they earned $100, they profited $9. That was free cash flow, $9. So that $9 would go to the shareholders of the company. Theoretically speaking, they don't give it out. They don't pay dividends. This is another thing that confuses people about stocks because they didn't give the money out. I'll get back to that. And on top of that, they were opening new stores. They were closing bad stores and they were renovating good stores. So a lot of positive things were happening underneath. But everyone was so negative, people didn't even pay attention to Dollar General. And this was there every day. You could buy the stock. And so I just looked at it and I thought one thing only. I said, I'm not going to make crazy projections about Dollar General. What the hell do I know about Dollar General? I went in a store once, but that's about it. I understood one thing. When we have times of inflation, okay, now I'm going to ask you a question. You're not going to like this question if you're actually that age. But when I was a kid, it was the 1970s. I was real small. But there was a lot of inflation. And then I grew up, and then I paid the prices. Whatever the prices were, I paid them, right? And guess what? We just had a whole period of inflation, and what happened? You just ended up paying the prices. Did you like paying higher prices? Maybe not. But you paid them. You just pay the prices and then we normalize again. And this happens all the time. So I just thought if Dollar General just normalized, then this stock is actually trading at 10% free cash flow, meaning I'm getting 10%. They're generating that amount of cash. And I thought that's not a bad deal. And all the margins would have to do is go from their 6 back to their 8, roughly 8.5, and then everything normalized, and the stock should be worth a lot more. That was it. Now, how hard was that really, what I just said? Now you say, oh, I don't know how to look at that, financials or whatever. But that's what I teach people. But it's not that hard. I didn't grab a spreadsheet. I didn't do a whole bunch of complicated calculations. And a lot I did with the AI now, which is amazing. I just kept asking AI questions and digging. So it's really wild. So anyway, that's up 35% since January. So that's not bad. But I told people in the group a lot of things that went up a lot more than that over time. And not everything I said has been 100%, but rarely anything has been a like dog or something. Maybe it just didn't go up much or was flat or down a little. So, okay. So in stocks, I feel it requires less specialized hands-on knowledge than real estate. Because in real estate, I really have to be on my game. I have to manage my manager if I don't manage the property myself, and I have to be on it. And I'm limited in terms of where I can buy, really. So, but the benefits are you have some tax benefits with real estate, obviously. You can leverage, which could be a benefit. It could be not a benefit. Again, I have friends in my group who leveraged and they're losing their buildings because of leverage. And I got news for you. It's very hard to go broke without debt. You have to have a really bad drug habit or something. It's really hard to go broke without debt. And I'm not saying I'm not a no debt Dave Ramsey guy. I have debt, but I use it, intelligently. And I just think about that though. I think about that. You can't go broke with no debt. So, all right, let me jump back in here. So that's a few things on the real estate side. I want to get into a few more here. And what time is it? 12:45. So we're on making good time here. How many are finding this useful?
This is awesome. We're missing your sound effects.
Oh, okay, yeah, I got sound effects. I forgot they were here. And those of you who haven't been on a call with me before, Jessica found me this thing. I said, Jessica, can you find me sound effects? And she did. And I thought, that makes the call more fun.
Yeah, baby.
There you go. So you got Austin Powers. All right, let's get back to some serious stuff. Enough of this joking around. Freaking bunch of jokesters here. All right. So here we're going to share the screen one more time. And all right, here's the average annual returns. I just want to show you this. So this is 100 years. Gold, which people talk about, has had a great run the last 25 years, but historically it's not very good. And inflation is 3%, 4% a year. So gold roughly keeps pace with inflation. You do a little better. Stocks, you've done better. Commercial real estate, there's also hard to get data from back there, but that's the estimated. So the best has been stocks. From 1980 to 2025, gold has been quite poor because gold was high then. People don't realize that who own gold. They say, oh, man, gold is great. If you bought at the high in 1980, you just got back to even, inflation adjusted. You just got back to even, inflation adjusted. It took you 45 years. Quite disappointing. Whereas gold has done, stocks have done pretty well. Commercial real estate, again, there's limited data because a lot of those transactions are private. Residential, 4%. This is the last 25 years. Gold has done very well, only a little less than stocks. But again, they have long cycles where gold is not good. But we'll see. I think, I'm not saying it's going down. It could go up more. I wouldn't be surprised if it did. Commercial real estate, not so good. Not so good the last 10 years. And residential, roughly when you think of houses, single family homes, you think keep pace with inflation. It's a savings mechanism to preserve your money. But the real one that's pretty consistently is owning pieces of great businesses in the stock market. This total returns S&P 500 has been way more years up. Those blue lines are years up and the red ones are down. So most years they are up, and occasionally they get walloped. And by the way, that's when you could really, really get rich. So get richer, as much as I don't want a stock market crash, if you have a crash in assets, if you train your brain correctly, it can be the greatest opportunity of your lifetime. But if you're also highly leveraged and you're in a position where it's very stressful, that will affect your ability to take advantage of it. I'm not calling a stock market crash or anything like that. You can watch YouTube for those people I have people call stock market crash every year for the last 20 years. They call a stock market crash. And meanwhile, they don't do anything. Not good. So look, the bottom line is, how do you spot these compounding investments? Which are the great ones that you could spot? Costco's, the Walmarts, the Nvidias, the Apples, the Microsofts. Yeah, it's all great to talk about those now, but it's like, what about tomorrow? So that's what we're trying to do. And I just want you to, if you take a minute, this might be useful for you. What benefit would it be to learn that? I think it's enormous. If you understood how to spot great compounding investments, what would it allow you to do? I've been able to give away more money these last few years. I love it. I take a percentage of my income and I could always do stuff. I had the time to do stuff like rescue that little dog. I don't know where he went. I hope he didn't leave. He's such a nice dog. But I have time to do stuff. And so I love investing. Also, I always say this for kids, like if you have kids that are small, you can put money in markets for them and they can compound over a long time and literally do nothing. The compounding requires time. The more time you have, the more that will benefit you, and it gets exponential. So at the end of the day, there's two types of investments. This is how you should think about it. There's productive assets, an apartment building, commercial real estate, farmland that you maybe lease out to someone, they farm it or you farm it, and stocks, pieces of businesses, private equity invests in private businesses, public stock market is public. All those assets produce something. Their businesses are producing cash, selling goods and services. Your real estate apartment building is renting out apartments, is producing a service. People pay for it. The productive assets are the ones that compound. And then you say, well, okay, on the right here, we have assets that don't produce a return unless someone else buys it and thinks that they could sell it to someone else at a higher price. And then that person has to think they could sell it to. So the asset itself does nothing. That would be gold, Bitcoin, those type of things. And you say, well, Bitcoin went up a lot. So it did compound. Yeah. So it did compound. It's quite ingenious. In the end, if you did things like Bitcoin all day long, first of all, how many crypto coins went to zero? Thousands of crypto coins went to zero. Thousands of them. So one is working, it's marketed ingeniously, but in the end, a change in sentiment will destroy it. And I don't know that it'll ever happen. It can go on for a long time. It could go to crazy heights. But to me, I don't do it. And I'll tell you why. I don't do unproductive assets typically because I think it's a bad way to think. And I think if you train your brain to think, I'm going to buy this thing and everyone else is going to buy it, it's going to go up. If you look for that your whole life, 9 out of 10 times you're going to lose with those. And once in a while, something will work. So hopefully the one that works will make up for it. My experience, it's not that way. But time will tell. Time will tell. We will see what will happen. In the end, stock price follow earnings. It's all about earnings. Your real estate, the value of your apartment building is the earnings that it produces. That's it. And, so unless it's some kind of development piece, I have a property where I had the rents, but actually it's zoned for a higher and best use. So the value of the property is worth more than the rents it generates because I could sell it to a developer or develop it myself. Howard Marks, good investing comes from buying things well. So these are the ways, to spot. These are some of the criteria. You have to understand emotions, markets, and valuation. So Buffett said, he goes, business schools teach you all the wrong stuff. They teach you efficient market theory. It's not true. All markets are priced exactly right at all times with all the information that is out there. That's what the business schools teach. It's wrong. Buffett said, if I was going to run a business school, here's what they should teach. Understand markets so you can take advantage of them. What I talked about, the dislocations. You have to understand it. You have to have that is an emotional strength, not an intellectual strength. It's the intellectual part is a small piece. Most people can learn how to think about a business. It's not that hard. But the emotional part is very hard for people. They see people getting rich, making money. They have to get in. It's literally unbearable for you to watch your neighbor get rich who you consider quite a bit dumber than you, and you're not getting rich. And you're like, that guy's making money. I got to get in on this. And that's not a good way to invest. So that's it. Now, the second part is once you understand markets, now I'm talking about real estate and stocks, then you have to understand how to evaluate and value businesses and real estate. That's the second part. This is business school, it should be. And then you want to look for these things. You could buy great assets at fair prices. That's Buffett's business school. So I just want to give you one more example. When you don't know how to value things, this was in 2022. Those top two stocks, Rivian and Lucid. How many heard of Rivian and Lucid? The electric car makers? Man, they got slaughtered. Actually, Lucid's down even more than that now. It's 90%. How did it get so mispriced? Let me tell you something. At the high, not even at the high, when I first noticed it, I told the Lions Group in May 2022, I said I would short the hell out of Rivian, Lucid, especially Lucid, and all Neo and Fisker, and I think Fisker's gone. Lucid. But what did I see? Again, this is not mathematical genius. I just looked at one thing. The total value of the company, which is on any stock quote, it's called market capitalization. That's the value of the company. The total value of Lucid was $25 billion. Now, General Motors, how many heard of General Motors? They sell millions of cars a year. You've all heard Cadillac, Buick, these type of companies, GMC. They sold millions of cars a year, and the value of the whole entire company was $50 billion. Now, Lucid, in the second quarter of 2022, sold 135 cars. 135 cars. I said that correctly. Elon Musk tweeted, yes, what? 135 cars. They sold more now, but that's what they sold. And the company was worth $25 billion, half the value of General Motors. Now, how many of you, if you actually saw that little thing, that wasn't that hard to understand, that's nuts? And Elon Musk tweeted, I just had more babies in the last quarter than Lucid sold cars. And that's a true story. You can find it. Okay, so Lucid went down. But here's the thing. It's very misleading because electric cars are a big deal. They were a big deal. How many knew they were going to sell more electric cars every year? You knew this. Everyone was promoting it. How many doubted that they would sell more? I'm not saying they're great or bad or good or I'm indifferent. But they were going to sell more. So what happened? The markets went nuts. The fear and greed. People said, I got to get in on Lucid. That's the next big thing. Again, they made a misjudgment about the future. You know how hard it is to make a car company work? It's literally, it might be the hardest thing you could do. Other than sending rockets to space, which Musk has achieved, and he's also made a car company. But do you know in the 1930s, there was hundreds of car companies in the 20s and 30s, and they all went away. It's freaking hard to make a car company work. So if you knew a couple little pieces and you saw the valuation, if you knew how to value assets, it was obvious that this was nuts. Now, the thing was that could go for a while. Asset prices could go crazy for a long time. And so just because it's gone crazy doesn't mean it's right. Doesn't mean it's a good investment. It may look good now, but what happened? It wasn't good. Anyway, so I think learning this framework is the most profitable and best use of your time to build wealth. If you can learn this, I think it is. And you have to invest. So I'm doing this, and I'm going to do a little promo for 2 minutes, and I'm going to take questions. But I'm doing this event. It's called Professional Investing Bootcamp. That's what I teach. It's how to spot great compounding investments in stock and real estate. And more importantly, almost, is avoiding the bad ones, the myriad of bad ones. So I'm doing this thing. I found this place. It's great. I'm joining the club. It's a private beach club on Miami Beach. It's called the Bath Club. It's a great place. It's a really exclusive place because I don't have my house anymore where I did the last 2 events. So I found this great place to do it. We have, so it's right before Business Mastery, starts on August 13th. So I kind of made it if people are heading down for Business Mastery, if you want to come a couple days early, come in on the 9th, stay all day with me, 10th and 11th. We're going to go through everything I'm talking about here. I'm going to go through in-depth markets, how to take advantage of them, specific examples. I'm going to show you how to value real estate, value stocks. I'm going to give you the framework of Buffett. And we're going to do it for 2 full days, stocks, real estate. I'm asset agnostic. The only reason I don't like real estate more right now is I just don't see the opportunities. I wish things were just really bad. In fact, in New York, there's great deals, but I'm not in New York anymore. I'm in Miami. Excuse me. So I don't do it because I feel like I want to be local for these types of purchases. But there's things at 10 cap rates in New York, 10 cap rates. Now, there's a lot of problems in there. So it's not as good as it sounds just off the top. But so that's what we're doing. That's what I'm doing in August. So I will just actually. So a lot of people have been to my events, and I think Jessica's going to post a link now where you guys can register. But what we did was, I'm doing a thing right now. The way I do these, I've only done 2 events prior. I'm doing my 3rd one. I think we get better and better every time, and people have loved it. I'll show you some testimonials. But this page here, you can go to, I think Jessica posted it, or she's going to post it.
Yes, it's on the chat.
Okay, it's in the chat. And so you can register now for like a really cheap price. This place is a very expensive place to do an event. So we're going to have lunch both days, so you don't even have to leave. We'll just stay there. We're going to have snacks, lunch all day long. And so we'll just drill into it. And you can watch the video here. I did a video explains more about it. And then we had this video of what other people were saying about my event. And then we'll do a little bit of Q&A. But I have tons of testimonials on here, tons. If you could go through, read, watch videos. People have enjoyed my content. They've helped them a lot. I've had people, I think what I charge for this event is absurd, but I don't, it's not just about money for me. I sort of have this mission. I was so mad at people like taking people's money for bad deals. I just felt like I can't do anything about that, by the way. I can't do anything about that. That's going to happen the rest of your life. You're going to get pitched bad deals. All I can do is maybe contribute by showing people what really works. I love it. I'm been good. I've had very good results. I post my returns like nobody ever posts their returns. I've posted them in the group every year. I show you screenshots. So I don't just talk about it. If I wasn't doing this, I would just be doing the same damn thing. Looking at investments all day long. I just wouldn't be talking to anybody. But I really enjoy the fact that people like yourselves, you like it. I like talking to you. I like getting together with people. We have a great time. We joke around a bit, and we have a lot of fun, and it's a great group of people. So I'd love for you to join me, but I'll just show this video real quick, and then if you have questions, post them in the chat, and we'll just start.
Teaching here
we'll start doing it. Can you all hear that? Jessica, is that on?
Yep.
I really love how it is transitive, not just to real estate, but to all forms of investing. So a few takeaways is basically really understanding the market which we are in and having the right assumptions. I think those assumptions are working gold if you get them right, or at least as close as possible. And what David is actually teaching here is a framework to get on those assumptions. And he's also empowered us with some simple tools where we can actually model some of these things, where we're really cutting out the amount of time which we are spending on trying to analyze these. So essentially what David has done is he's demystified a way through which you can actually analyze these and go after the one which you feel has potential and then lock better. I think this is like general. It needs to be for everybody.
It's $997 bucks. That's it. And we give you
make wealth is by investing. You have an income. David did talk about it, and you have an income. Then you're rich. You make it rich only by investing. And I think anybody who has an interest or is getting started in investing, or a seasoned investor, this is kind of translated for anybody. So I would recommend it. This is like a required learning.
I come from a real estate investing family, and I think it's interesting that you could still be in level 1, and then part of you can be in level 5. So that was one of my favorite things to learn. Well, I love the underwriting. Like I said, I've been doing real estate for a while. I love learning new thoughts on underwriting. I think that David's, the way he teaches the underwriting is way more conservative, which I think is really appropriate for the market that we're in right now. I think anyone that's even remotely interested in real estate investing would benefit, because David teaches you the basics, and then you get to decide how to use it. So anyone has the slightest interest would be amazing.
Well, glad to be here. Thanks for having me. And I gotta say that the phrase to sum it all up is the math is the enemy of bullshit, right? And that's what we went through yesterday. But one of the most favorite parts for me was talking about the risk ladder, talking about discounted cash flows and the fact that all investments compete. Just the fact that David was talking about pro formas are kind of all bullshit, if you will, but you gotta go piece and find out the numbers for yourself. And the epiphany for me was that most of these pro formas are targeted towards retail investors or level 1 type investors. And so I'll certainly use the spreadsheet to crunch the numbers and start really getting to the heart of the truth of the day and the deals.
What I really like.
So the event, we're only charging $997 for it, or virtual $797, and that'll go up in a little while. But the big thing right now is if you do it, I give you these videos that I sold for that price. I actually give you the event is basically for free. So you get the how to invest for long-term wealth and income video course online. And you get something called Boot Camp, the original one I did. This is what I'm doing here is much more advanced and much better. But that event was good too, is the first event I did at my house. So you get those videos, but that'll expire in a couple of days. We're not going to give away those videos. So it's a pretty good deal. I would just do it. If you have any thought to go, I would just do it and get started. But I'll just play this. And if you have questions, post them in the chat. And I have some questions of people who signed up when they came, and I'll answer a bunch of those.
I recently relocated to Europe,
10 minutes
so
or so.
I thought, a lot of the principles, they may be very US-centric, but what I really liked is that actually there's some certain internal principles that David covers around how to look at investments, how to look at real estate investments, and probably one of the things that kind of caught my attention was the type of markets one should look for, whether it's an investor market or a transition market, or so I think looking for those transition markets was something that was very enlightening.
What I really love is the group of people that ends up showing up at one of these events. Everyone's high-level players, and really, just like Tony says, proximity is power. And just being in the room, I just wanted to be in the room. And it was really great to be able to network with other people who are doing big things as well, and it's just awesome. So Dave got me yesterday when he was saying, what is the missing opportunity that you have? Well, I have 8 acres of land in Raleigh, North Carolina, and I have 2 properties on that property, and I could fit way more properties. I have 1 tiny house and then another rental property. And so my action is going back and getting that settled and putting probably 10 or 15 units on that property.
I came here to learn from David. I love his style of teaching, and I really appreciate how real and authentic he is with what he shares. You can tell he shares from the heart, from his great experience, and is really just here to help all of us become better investors. So there's actually a big sign in the room that says math is the enemy of bullshit, and I love that sign, because if you can keep emotions out of investing, it makes so that if it makes sense, you do it, and if it doesn't make sense, you don't do it. And it sounds so simple. Just the way that David's broken down how to ask the questions, what questions to ask, what to look for, what kind of markets to look for. I'm excited to be able to take that back to where I'm investing and become an even better investor with just more knowledge, to be able to help myself, to be able to help my investors, and to really make sure that people are asking the right questions, and I'm the leader that's allowing them to do that.
I think going through real estate frameworks, particularly ones we can apply immediately, understanding where to start, how to go about it, and then actually walking through examples was extremely helpful to understand the tools that would have been gifted. Longer term time horizons and applying risk ladder to your overall portfolio to look to stay in the game longer. And as you apply the framework, you can make better decisions more often and avoid bad decisions, which means you get to play the game at a higher level longer, which is great for everyone. Even if you don't invest directly in real estate, understanding the investment class is really important in understanding your overall portfolio, because every dollar competes. You need to understand what other opportunities are out there, and getting such a masterclass from a very experienced investor such as David allows you to see what's really out there. And maybe it's for you, maybe it's for, not in terms of real estate, but overall applying this knowledge is invaluable. It's incredible.
So there's tons more of testimonials. People wrote stuff, videos. You can go to the page and read them if that's helpful for you. And I also explain more of the details of the event on that sales page. So basically, we're going to spend part 1 doing this 5 levels of investor, understanding markets, recognizing patterns. Then we're going to do valuation of real estate and stocks. I'm going to show you. You're going to understand it. You're going to understand it. It's not about financial analysis, okay? It's not. Warren Buffett always said, it's more about the emotional stuff than the intellectual. Then we're going to do big themes. I'm going to tell you what I'm doing now. I'm going to give you specific examples. I give you a whole bunch of things here on the page that I told people that are up a lot. And I told it way before people recognized it. And I've also told people things like, as we talked about NVIDIA, and last June, a year ago, I said I thought it was fully valued, and it's literally at the same price a year later. Now, how did I know that? Because everybody thought NVIDIA was going to go up a lot. Now, they can go up a lot, but they have to, at this point, blow away their earnings. They have to come out and say something really dramatic, like, our demand is way more than we thought. And there's reasons, clear reasons. That's a cyclical business. But let me be clear, NVIDIA is a great business, and that stock can go up. But it's either going to be because of the emotions of the market going wild, or they literally come out and say, you know what, we were totally wrong about our earnings. We're going to make even way more money than we thought. Because at this point, it's all priced in. There's not a person on the planet Earth who's been watching anything who doesn't know a little bit about NVIDIA if you're paying attention. If you're not, I understand why. But I told people stuff that was so cheap. Alibaba, we did Berkshire, AI. I said back in March 2023, I said, you should own these companies, because I didn't know, it reminded me of the late 90s. I thought the dot-com build out was a huge change. The AI thing is going to be the same. That's obvious now. But at that time, ChatGPT was only out for 6 months. And I said that. So you can get this deal. It's going to be good like for a day or so. I would just do it. If you're even thinking about it, do it, because you get the videos, or alone is worth it. But we're going to have a great time. We always have a lot of fun. If you're in my master's group, we have a special morning, the morning of August 12th, with Joel Seiden, who's a friend of mine. But Joel will speak at the event as well. So let me tell you about these guest speakers. Mark Faber, who writes the Gloom, Doom, and Boom report. He's got an incredible, very wealthy guy, lives in Asia, been investing for decades. He's quite old now. And he has very unique insights on the world, and he's pointed out very cheap assets around the world. So I find him very beneficial, and he just has a very interesting view, and he's going to come in via Zoom and speak to us. I also have my friend Joel Seiden, who some of you know. He's a legendary real estate investor in his field. He's not famous like some names you've heard in New York, like Macklowe or Kushner or Trump, or these people who did big real estate deals for years in New York. But here's the dog, is back. Okay. He just came back, the little guy. I got to feed him. All right. So Joel is legendary, 50 years in business. He's friends with all those folks, by the way. He's a very humble guy, very spiritual guy. You wouldn't think that from a New York City real estate investor. Everyone who hears him loves him and gets incredible insights. We have a group with him, actually. It's a very higher priced group called the Spirit Entrepreneurs Council with Joel Seiden and myself. And that's for business and everything like that. And just, he's like, tells you the art of succeeding, investing, business, life. So he's going to speak at the event as well. I'm going to do an interview with him. So anyway, I had this, and then I got these bonuses. You can have all these videos which will come off in a day or two. But if you want those, I always just do it. I just, Tony, I went to a business mastery event with Tony Robbins, and he said, make them an unbelievable offer. So that's what I came up with. I thought it was unbelievable. And then, by the way, what we'll do though, and this will stay on, is I'll do a follow-up call. Like a few weeks later, we'll do a call. We'll get the whole group together. Because what I always found is you go to an event, and isn't it nice to like be able to later be like, wait a second, what the hell did that guy? I remember that piece, but now I don't. And you want to ask a question or get a little recap. Wouldn't that be nice? So we'll do that like after the event. We'll do a little recap call. You could check in, and so. It's called Professional Investing Bootcamp. It's a pretty boring name, but we're going to have a lot of fun. We're going to have a lot of fun. I'm going to tell you the real deal. I've been doing it a long time. You can watch this video here, see my guitars in the back. They're not there for any particular reason. I was going to mention in the video, that the guitars were there because, well, first of all, I thought it was just interesting to have some guitars there, and I like them. I just like looking at them. It's all about what I like. That's in the end. And I just, I have them there, and they're not investments. They're collectibles. But like the guitar there, that's 1952 Blackguard Telecaster. Somewhere worth around $85,000. But that's if the cover of Born to Run with Bruce Springsteen. He has they call it Blackguard Telly. It's the first years of the Fender Telecaster. Anyway, I love collecting them, and that's more of a passion thing for me, and I love playing them. So it's just for fun, that's all. And so join us. So anyway, let's do some questions. Anybody have questions in the group? Where are you planning to send us hotel? Oh, we have room blocks. I'm just about to sign that right on the beach. You could stay on the beach for like $250 a night at a pretty decent hotel. Right up the block, a few minutes away. So you'll be in Miami Beach. It'll be super fun. And then, on the 12th, when the event is over, you head up to West Palm. If you're going to Business Mastery, it's super easy. Doug's not involved with the event. I think Doug's going to be heading up the sport team, though. He's not involved with it. Thank you, David. I'll definitely job. Yeah, I would love to see you. I saw some of you sign up already. You could change to in-person later. Yeah, just send us a message, support at The Ultimate Investor. You could change later. I have questions on a spreadsheet, so I will do that. Real quick. And if you have questions or you want to raise your hand, you can raise your hand and we can get those. So people have been in my group. Debbie, some of you have been to a bunch of my stuff. Hey, Debbie. She's like, you talking to me? Where's the questions? Oh, here. Wait, what? No, here they are. Okay. Questions. How much of your portfolio do you allocate to stocks and how much to real estate? Well, I had a lot of real estate beginning, and so that was more my assets, but I don't think of it like that. But so probably half and half. Nina, so if you come in on the 10th, it starts at, like, we're registered at 8 a.m. and we'll start at 9. So, but if you could get in, we'll wait for you. No, I'm just kidding. We're not going to wait for you. But come as soon as you can. I'd love to see you there. And okay, so I'm in the UK. Better to buy in a capital city, new build, or old property with more scope for increased growth but higher upkeep? Well, that comes down to a question of competitive advantage. When you buy anything, property, real estate, you have to think, does it have a competitive, sustainable, long-term advantage? I'll give you an example. If you buy an apartment building and you're surrounded by land for miles and miles, you better hope you paid a good price, because someone could build next to you. Now, if they could build next to you at less than you paid per square foot, you're in trouble because they're going to charge cheaper rents. Now, I'll give you the opposite example. My example, in New York City, I own older walk-up apartment buildings. I paid a very reasonable price per square foot years ago. You cannot build in New York City next to me anywhere near the price per square foot that I paid. That gives me a sustainable competitive advantage. In other words, you cannot undercut me. If you build a new building, you have to charge a lot more money. And they get it. And meanwhile, while this goes up, my rents go up over time. So they've been going up and up over time. I've had years where they haven't. And the pandemic went down 30%. So, but now we're at all-time highs again in New York City rental real estate. So the city also has a competitive advantage. Why? Think about it. How many of, I left New York, okay? I lived there my whole life, and I left. And I live in Miami, and every day the sun is out. I like it. I'm not going back. Tell the IRS, because they're still auditing me. They're waiting for me to go back so they can nab me. By the way, if you go back now, they'll consider you never left, and they'll charge you all the tax for the previous years. And I've been gone 5 years. Can you imagine that? So I'm not going back. So that's on the record for the IRS and everybody else. Now I'll go and visit. I love to visit New York. But think about this. We're at all-time high rents, and hundreds of thousands of people net left. And we're at all-time rents heights. What is going on? Well, I'll give you might not know this, but kids get out of school everywhere around the world, and a large number keep wanting to go to New York. They want to go to the big city and make their way. And so I always have an influx of new young kids. That's normally what I rent to. I have 3-bedroom apartments. There's a lot of shares. They come in, they share. That's my clientele. And it just keeps, over time, it's gotten better. So competitive advantage is huge in real estate and in stocks when you're thinking about businesses. Like Costco, huge competitive advantage. They have economies of scale. Very hard to compete with them. Go start a competitor at Costco today. Go start a competitor to Coca-Cola. Many have failed. Richard Branson, Virgin Cola. He's a pretty smart guy, and he lost. He made a bad decision, though. He said, I want to try to compete in the soda business. Really hard. Now, Coca-Cola is also very expensive stock valuation-wise, because everyone knows it's probably the greatest brand in the world. It's known everywhere. I went to Bhutan, Nepal and Bhutan, which Bhutan has no commercial businesses. And you know what they had? They had Coca-Cola. So there's companies like that. Let me answer. James Wade, you asked me a question. I don't know if you're still online. You can send us a message at support@theultimateinvestor.com about that. We can help you. But yeah, we have the online stuff and the event. And if you still need, you still want more help after that, I think you'll know a lot. If you did all that videos online and you came to the event, geez, I mean, if you really like the subject, I think you'll find that you get a lot. But I would love to help you. So send us a message if you want to talk about that more. Lauren, you're in Miami too. Congratulations. And I do like this sun every day. I like this sun every day, I'm going to say. From a pure tax perspective, which is better for non-U.S. investors, investing in real estate or stocks? Well, if you buy something and hold it forever, well, they're both tax efficient. Now, real estate does have other tax efficiencies, depreciation, and things like this. If you're going to sell your real estate, you can roll that into another asset. You might not be able to do that with stocks, depending on your ownership structure, but you cannot really do that for most people. So you, Jessica, in terms of somebody asked about a deposit, I mean, yeah, if, Jessica, if you could just handle that with them, I guess you could do something, but if you could just pay for it, maybe we should offer some payment thing. I don't know. I just never did that really, but it's not a problem. And okay, we'll do a couple more questions and then we got to jump. What is the best way to learn both skills for real estate about stocks investing? I had made money and lost money on both. You came to the right place. I don't even know if you're on the call still, Juan, but I got news for you. That's what I teach. In case I wasn't clear at this point. But I know you asked this before. This was when you registered. But yeah, come to the event. I'll teach you all this stuff. We'll have fun. Is the reason people love real estate that is in terms of returns more stable over the long term? No, this is a great question. I love this question. He's saying, is real estate more stable? No, it's just not quoted every day. It's not quoted. It's the same thing with private equity. Say private equity is stable. I love private equity. Don't get me wrong. I think it's fine. You got to have the right managers and everything, but it's not quoted. So people say it's not volatile. It's only because it's not quoted. Stocks are quoted every day, so this appearance of volatility plays out in real time. But that is the advantage. When you become a professional, you love that. I love when people go nuts in the stock market. Now, it's not always easy. I'm not saying it's simple. Stocks sold off. Even with my group, I'm like, I'm probably early, but this is what I'm buying. I like these valuations of these companies at this price, and I did it. And, I always feel it's hard. It's really hard to buy when everybody's selling. It's really hard. I don't care. I've been doing this a long time. I still find it. I remember in June 2022, markets were let's back up more. Pandemic, March 2020, stocks started going down. How many remember that? It was like brutal, right? Everybody thought the world was going to end. And I said, well, if the world ends, it won't matter anyway. But I'm going to buy some of these things because they're cheap. And I started buying, and I was way too early. I'm always too early. But I started buying stocks, and they went down, they went down, they went down. And I bought more, and I bought more. And then Bill Ackman came on TV. Do you know Bill Ackman? He's a hedge fund manager. He's got like white hair. He's like real vocal now about a lot of subjects. And I love this guy. I'll tell you why I love him. Because he went on TV, and I thought he was crying on CNBC. And he said, we're going to hell if we don't lock down. We're going to hell. Now, what's the buy at the point of mass pessimism? How many's heard that before? Buy when there's blood in the streets? What's worse than hell? This guy was crying. He's a billionaire hedge fund manager, basically crying on TV, saying, we're going to hell. I'm like, this guy is losing it. And he's like one of the best in the world. And I thought, I got to buy more stock. And that was literally the bottom. That guy bottom ticked it. And you know what? It came out later. He made a ton of money shorting. He made a ton of money, like billions, shorting the market. So anyway, he did it again just recently with tariffs. I'll tell you this last story. When the tariffs, Sunday night, stocks were down. It was, the tariffs came out. I forget what actually night it. I think it came out a couple of days earlier. Anyway, he went on thing and he said, we're going into I can't make this up. He said, we're going to have a nuclear winter. We're going to have a nuclear winter with tariffs. I thought, again, I love this guy. I bought a lot of stocks because he was again saying such negative. I thought, what's worse, nuclear winter or hell? How many for hell? Hell? Nuclear winter? Like, they're both like pretty bad. Like, pretty bad, right? So I was like, man, that guy, I love Bill Ackman. I just love when he loses it. And so he's like a great marker. So then there's people like, I just look, that's called anecdotal evidence, right? It's not like scientific. But when you see people going nuts on the upside, posting on Facebook, I told you I was right about this, and are they bragging about making money? That to me is like red alarms. It's like when people start bragging and saying how great, it's like, wow, we're in a hot market. And a hot market is likely to break at some point. We have to be a little bit careful, look at our valuations and see what we're doing. Are taxes on U.S. stocks possible to be 0%, either for a U.S. investor or non-U.S. investor? Well, if you don't sell them, if you sell them, you're going to pay tax. Sue, the person I was talking about was Bill Ackman. He was so negative. Bill Ackman, he's a hedge fund manager. He's a billionaire. He was at the Berkshire Hathaway annual meeting. He's a big Buffett disciple. But between hell and a nuclear winter, I love the guy. He's always giving me a heads up when to buy stocks by his extreme negativity. Oh, somebody's coming late to the event. I'll just let them in. They're going to be disappointed. All right, we're going to wrap it up. You can message, and if you have any questions, and I hope to all see you in Miami Beach. I made it as simple as I could for you to do it. I'd love to see you. I don't do events that much. I made a little cheeky post that I hate events. I hate planning events. I actually love the event. Once we're there, I get to see everybody. It's fun. We have a good time. As you can see, I like to have a good time as much as possible. I tell a lot of jokes. Maybe I'm the only one who thinks they're funny, but we still do it. And we're going to learn, but we're going to learn a lot. I love it. I've gotten better at it myself, actually. It's been an interesting process by talking to all these people and teaching. I felt like I've gotten more refined in explaining stuff. So I don't know if you experienced that today for those who have tuned in, but I appreciate you being here and I appreciate you spending the time. And I will see you guys soon. And I thought we'd go out with a little music. See you soon.